These are in listen-only mode.
Good morning, everybody. Carol Mahoney here. Just giving you a couple of moments for people to join the line. As in previous calls, anybody who has joined via telephone, I will unmute your line immediately. Anybody who is on voice over IP, please raise your hand and I will then release your line because of background noise. That's enough from me. I'll hand over now to Mike Atkin and Mike Bennett.
Yeah, greetings. So, Mike, let me just set it up real quick. Good morning, everybody. If you recall, last time we went through and completely refactored legal entity based on a lot of feedback. Mike's presented that. He got some validation of it along this week, so I think we're done with that in terms of the way it's refactored. Mike's put together a what is facing us to complete this activity document. So he's going to run through that in terms of what we need to do and the deadlines. And then with that, we need to make a few decisions about the delivery schedule we're looking at for the, let's call it the first draft of the standard. You know that through this process, we push back the standards process 1 quarter. So we're looking at a standards release process in March. So in the meantime, we need to get our documentation straight and our first draft underway. So with that, let me turn it over to you, Mike, and take it away in terms of your agenda and the things you want to do today.
Thanks, Mike. Hello, everybody. So as Mike says, we're working towards a first draft in early December so that we have something to show the OMG folks and so that you have something to make reference to that contains a sensible subset of what will be in the final release for March, which will need to be completed by early February. So we'll continue with these sessions after the first draft and just looking ahead at the kinds of things that are in the model that we haven't yet looked at and that we need to look at. I'll just describe some of the things we need to do and we can think about which of those we aim to get into the first draft so that we have a basic usable set of terms and definitions and relationships for the whole universe of business entities that we know of. So one thing we haven't looked at yet is the basic facts about entities, the names and addresses and identifiers and classification schemes and various things like that. There's a few of those in the model. We haven't looked at them yet. It'd be nice to finalize what are the basic facts that matter, and some of them are almost certainly pointing at the wrong things because we've rearranged the basic hierarchy a couple of times. So we need to dive into that, I think, before the first draft. We need to think about, we identify sovereign as a kind of legal person. There's a whole lot of terms in an earlier part of the model on governments and municipalities and government agencies and all of those. They were originally not going to be in scope. We need to decide whether they're in scope for our final release. I would suggest we perhaps don't try and get those into the first draft, but that's there on the map to think about. And thirdly, and perhaps most importantly, the relationship hierarchies. So in the earlier draft of this model, we had loads of different kinds of relationships, perhaps too many, perhaps too few. We need to get decisions on the scoping of the final model in terms of what kinds of relationships we need to include, and also figure out, again, the basic ones to put in the first draft. So we have some pretty strong terms on share-based ownership and ownership with control. There are other forms of ownership. There are other kinds of entities that can own each other. There are other kinds of equity that you can have in something. So we need to do a deep dive into those at some point, but I suggest that for the first draft we need to spend a session on the hierarchies. A quick bit of housekeeping in terms of sessions. I'm actually away next week at a conference in Dublin, and the week after that is Thanksgiving. So we need to decide, well, you're welcome to carry on without me next week, but I suggest that might not be a good use of our time. We need to decide whether to do one in Thanksgiving week or not. I'm inclined to say not. So that only gives us
well, instead of football, we can do ownership and hierarchical structures. I mean, come on now.
Yeah, there's no contest. So yeah, do put your thoughts down in the chat for that. But otherwise, provisionally, I'd suggest we're probably not going to do a session on Thanksgiving week. So that gives us really a couple of sessions to finalize the basics that go in the first draft. I've then got some technical modeling things to do with that stuff in order to put it through the machinery that produces the OMG specification, the adaptive front end, machine readable files, and so on. So that's looking ahead, so we know what's coming. Today I want to try and hopefully wrap up, but try and make some progress on the things we talked about last time. So last time we started by saying what kinds of entities, business entities of one sort or another, relate to funds, and we looked in particular at trusts. We also looked at special purpose vehicles, and something which I think was clear from that session is that in looking at special purpose vehicles, we need to look beyond just the kinds of vehicles that are involved in your classic investment fund type of thing that we've been looking at, because there are also special purpose vehicles relating to things like tranche mortgage-backed securities and stuff like that. We have all that in the model from the earlier securities sections. We'll move that stuff to the business entities material, and so and there's a lot more commonality between the different kinds of special purpose vehicles than I'd realized. So I've just got 3 more bullets here that just briefly define the kinds of questions I want to go through and ask, but do feel free to jump in. I shall be monitoring the question queue, and Carol will also keep an eye on that, because I'm bound to miss some of your questions and things. But there's different things I want to go through on special purpose vehicles. I've pulled out a diagram, you probably saw it on the website, with the different kinds of SPV or special purpose entity that we have already defined. We have relationships like sponsor, we have the legal form that it takes. I'd like to get some consensus on what are the range of entities that can fulfill those different roles. Similarly, around funds, there are different kinds of funds with different structures, as we know. We looked at trust funds, we looked at funds that are constituted using some kind of special purpose vehicle. There are others like the contract form. Let's see if we can identify the types of entities, what kinds of entities can fulfill the roles of fund administrator and other important parties in the fund universe, and look at the kinds of entities that are involved in different kinds of funds besides just simple investment funds like those tranche debt securities we mentioned. And then finally, in trusts, again, as they relate to funds, we have a basic structure of trusts, as we saw last time. We looked at different scenarios in which the beneficiary may be a stakeholder in the fund, or maybe the fund SPV. Let's see if we can identify what those beneficiaries are, what facts there are around those that we need to know about. And related to that, the trust deeds, which set out the legal obligations of the trustee, and also define the different parties in the trust. To what extent do we need to model the kinds of contractual terms that exist in trusts generally, and specific to the kinds of trusts that we're interested in funds? So the end result of this, what we aim to get to, is that in the FIBO business entities material, we have everything we need for different kinds of business entities as they relate to funds. We're not going to do the model of funds themselves, that's a whole huge thing, but we want to make sure that we've covered what needs to be excuse me, what needs to be in FIBO for business entities as it relates to funds. So any initial questions before I dive into the first thing, which is the special purpose vehicles? Good.
You're on your way.
I'll take that as happiness. So I uploaded a diagram here. I've added a couple of things to it, but it's still basically what was on the website in preparation for this session. And this shows, I'll just move down to the center here, the terms we currently have in the model for special purpose vehicles. So we encountered this concept 3 times in the course of modeling securities and funds and so on. Once was when we looked at basic security types, and we had participation notes which are issued by a particular special purpose vehicle. The other thing we spent a lot of time on doing our mortgage-backed security proof of concept work was the debt SPV. This is one that relates to issuance of asset-backed securities, CDOs, and other kind of mortgage-backed securities, and so on. And then finally, when we went to the funds review with the farmer, we identified the funds SPV, which we talked about last week as well. And so we put that in the model. The thing that we'd established about funds was, about SPVs, was that essentially the identifying facts, one identifying fact about them, they always hold some kind of pool. The pool is some kind of collection of assets that's held by somebody, and that might be a pool of debt, a pool of securities, a pool of debt instruments, or of course the fund itself. So remember, the word fund can be applied to three things: the fund unit, which you buy and that has a CUSIP and so on, the fund as a pool of assets, and the fund as a legal form. And so here we see fund as a kind of pool. So we've essentially refined down the kinds of pool relating to the kinds of special purpose vehicle. And then we have some basic common facts about special purpose vehicles. We have the purpose, which really defines the subtypes of the special purpose vehicle. We have an intended liquidation date. We have a sponsored by relationship. So this is the special purpose vehicle. Remember, the scenario here is that some entity creates a special purpose vehicle to take some stuff off their balance sheet and put it on the balance sheet of that SPV or special purpose entity, which is then used for the purpose for which it's explicitly set up and for the length of time that it's intended to exist. So that's the sponsoring entity. And then secondly, we have, because this is a functional entity, so it's an entity defined in the context of what it does, in this case a special purpose vehicle, it can be constituted as or have the legal form of a range of kinds of things. At the moment, I've got both of these pointing to our body corporate term. This is a legal person or liable entity, which is also a formal organization and which is formally constituted by some instrument of incorporation, not shown on this diagram. So this is essentially an artificial legal person or a legal fiction that creates some liable entity. So the first thing I want to look at, and I believe this is wrong from what we've already said, so I want to get the consensus of this group, is these two relationships here. For all special purpose vehicles, whether they are for funds or for debt issuance or whatever, what sort of form can they take? So must they always be a legal person, or can there be any kind of formal organization such as a trust and so on? And what sort of thing can be the sponsoring or originating organization that creates them? Must that be a legal person? Can it be any kind of formal organization? And remember that formal organization is the physical form which a legal entity generally takes. It's any kind of entity which has some formal arrangement described by this contract. That's an organization covering agreement that governs it. That's what distinguishes it from an informal organization. And it is this which will include trusts, foundations, and so on. So I'm suspecting that one or other or both of these relationships should be promoted to formal organization if the range of things that can fulfill this relationship is more than just some liable entity or legal person, and may also be a trust. So those are the first questions I want to tackle, and I wonder if anybody's got some inside knowledge they can share with us, or examples that would show that we may have put this too far down the chain. You know, when this model was first created, we just had one basic concept here of legal entity, and we didn't have the distinctions that we have now. So we need to determine, so I'll put it in plain English, constituted as, what kind of thing can a special purpose vehicle be? Must it be a legal person, or can it be any contractually capable entity? Can it be any formal organization, and so on?
Mike.
Yes, Carol.
I'm sorry. Phil Lee, you've raised your hand. Your line is open. Can you speak?
Thank you.
There you are.
Hello. Can you hear me?
Perfect.
Yes, Phil.
Hi, Mike. Sorry, I apologise. I missed last week's session. I was on a holiday. Couple of points. Special purpose vehicles may have multiple sponsors. Is that covered by the model?
No, it is not. Thank you.
Oh, they certainly can and often do. Typically,
Right.
a joint venture between two companies can create a special purpose vehicle.
Thank you. That's exactly. I'm going to note that as a note, but I've also changed the multiplicity of this relationship to show that it can be one or more. But I'm going to explicitly note that and see if we can think of a more formal way of modeling it. So let me just write that down, because that's very important.
Yeah, I mean, it's classically used, for example, where you've got companies that want to share intellectual property between each other, but not with existing customers.
Right.
So they create an SPV which ring fences the IP away from everybody else.
So ring fence the IP away from the sponsoring organisations themselves.
Exactly. Or it doesn't have to be IP. It could be any asset. That's the point.
Now that's very important, because I haven't tried to represent this formally yet, but the usual scenario we get with an SPV is that it's created to put to take something off the balance sheet. But here we have a different, or maybe it's the same thing said a different way, but you're taking assets. I guess it is the same thing, isn't it? Because you're saying that asset, whether it's IP or some holding or whatever, that was on the balance sheet of the sponsors is now on the balance sheet of the. So I wonder if I should try and, I won't try and do it now, but try and model that formally. So this is the same scenario we saw before with more detail.
Yeah, absolutely. I mean, it's classically used to put assets at arm's length from any of the sponsors, and therefore any people who have legal call on the sponsors directly.
Off the balance sheet of the sponsors, and this means that it isolates those assets from anyone that has some legal call on the sponsors.
Yeah.
And that may help to. Yep.
Sorry, I mean, obviously, post Enron, this is very tightly regulated for obvious.
Good point. Now, I wonder if, in the course of telling me that, you've answered the question about the possible range of this. You've talked about isolating those assets and the and any liability around those from that entity. Does that mean that this can only be, or perhaps in this scenario, can only be a liable entity or legal person?
Absolutely, that's the next point I was going to make.
Thank you.
Which is why I apologise for not being on the call last week, because I'm not sure, based on what you said so far, where exactly you ended up with trust funds, but trust funds are categorically legal entities.
Right, good. I'd like to dive into that some more.
They absolutely are. They can be sued and have been sued many times in the court of law, either along with their trust manager or separately. And sometimes the trust fund has sued the trust manager.
Now so this is an interesting one, because there's a nuance here. Let me just jot that down. There's a nuance here I want to pick up, because the legal chap explained it to me once, and I'll try and explain it. Let me just get this down. So trust fund can be sued, and so are included in the range of what we're talking about here, right?
That's my take on this, Mike. Absolutely. That's certainly the way we model it here.
Now, when a trust fund is, well, there's two things I want to unpack from that. But so before I do, you mentioned that sometimes you can sue the trust fund and the fund administrator.
well, you'd sue them separately because they're separate legal entities.
Right.
If you were taking a court action against them, you'd have to name them as separate defendants.
Right. Got it. Now here's where it gets complicated, because you can sue any contractually capable entity, even if when you sue that entity the liability is passed through to some legal persons, such as, for example, if you can sue a partnership, but that liability is passed on to the partners. So the defendant would still be the partnership because it's still a contractually capable entity.
Yeah, it's different
but
for
it's not
funds.
itself the legal person. It's different for funds, or
The fund is an autonomous legal entity. I don't know how you categorize that on the model. So when you sue a fund, you're not implicitly suing any of the trustees or the trust fund manager. You're suing the fund as a thing in itself.
Thank you. That answers my next question, but I'm going to ask it anyway. So I'll just jot this down. We're not implicitly suing the trustee or any of the fund managers. We are suing the
Fund itself.
That is the fund itself. Good, because here's the next question I was going to ask, and you'll see how you've already answered this. When we talked about the role of trusts in relation to funds last time, it was clear there are two different scenarios, and I was writing too quickly to easily segregate the two. And let me just see how well I've managed to capture this. There were at least two scenarios that we came across in relation to funds, and it's actually in this one, I think, with the notes and things. So in one scenario, so a trust is a formal organization. It's not itself a legally a legal person. I think you've sort of confirmed that just there, but it is the two scenarios. Let me see if I got this right. One is where you have your trust sponsor, your beneficiary, your trustee. The trustee is responsible for administering the fund and so on. The responsibilities are set out in the trust deeds, and the beneficiary may simply be the unit holders in the fund. The second, and I think completely separate scenario, is the beneficiary is a fund's special purpose vehicle. So in some kinds of fund, and I don't know what they would be called, but in not all kinds of funds, but in some kind of fund, you have a trust. The trust essentially must be, I think, fulfilling the role of fund administrator, if I've got that right. And the thing that it administers, the fund, has some legal form, which is the fund's special purpose vehicle. Would that be correct?
I think that sounds correct, Mike.
Fantastic. Because one thing I did pick up in the detailed fund model is that there's always a fund administrator, and even if neither of those is a trust, so I was given some Dutch examples, and you have like a big fund management company like Robeco, and they have all these different legal persons, legal vehicles defined as entities themselves, and then they have fund administrators that are also, but differently, a different legal entity whose role is defined as that of a fund administrator. And I guess that scenario would apply even if there's no trust involved, and it's just a case of what form the fund administrator takes that would distinguish whether something is a trust fund or some other kind of fund. Would that be correct?
You're thinking about something like a securitization?
I don't know.
Because if you were, I was going to say yes to that.
Right. So that brings us to the other point I mentioned in my agenda, which is when we talked about funds, I've always kept these in my mind in a completely separate bucket from mortgage-backed securities and asset-backed securities and so on. But
they are separate buckets.
But they're both.
They are separate buckets, but they're both legal entities.
That's right, and they both actually hold some portfolio of assets in some pool, and they both have a lot more in common than I had realised by keeping them in these different buckets.
Yes, exactly.
I don't have that hand. So let me try and jot that down. So the trust is the different. I'm just going to tell me if I got this wrong, but I hope this is right. Forms which a fund.
So are you certain about the fact that you can sue the trust and not the trustee? Because I'm doing some quick searches while you're talking, and everyone says that that's not correct, that you sue the trustee, not the trust.
Ah.
If you give me some time, I can find some examples, I'm sure. Because it's about 8 months ago, but I looked into this quite heavily. But I can't do it right now.
No, I mean, of course, you know, I'm just doing a search while we talk. So.
Fantastic. So there's some research to do here. Assertion, you can sue trust. You can not sue the trust. Could it be there are jurisdictional variations? I know that, for example, there are jurisdictions, or so I'm told at least, in which trusts can themselves be legal persons or liable entities.
Yeah, that's entirely possible. Probable, even.
In which case, the thing you can sue. So, I guess firstly, one thing have I got right? When you sue something, there need not be a legal person. You can sue any trading entity, such as a partnership, a trust that's not incorporated as a legal person, and so on. And all that happens is that the liabilities pass through to the individual entities. Is that the case? Like when you have a defendant named in a court of law, does the court of law penetrate through to the entities and name them at that point, or does the court of law name the formal organisation?
I think we might be in a bit of a semantic maelstrom here, because...
Good. That's where I live. Yep, go on.
If you sue a partnership,
yeah,
the defendant, certainly in the UK, you are, if it's a normal partnership, i.e. not one limited by shares or guarantee,
yep,
but a normal traditional partnership. So you and I have just entered into a partnership, yeah?
yep.
And somebody tries to sue us. Basically, they can't. They'd have to sue you and I jointly and severally.
Ah,
or independently. We can each be sued on our own.
So someone has to name the partners explicitly in legal actions.
Whereas in a partnership limited by shares, like, for example, the John Lewis partnership, you can sue the John Lewis partnership because it's a legal entity freestanding. Right.
Well, at that point, that is a body corporate or artificial legal person. It is a incorporated partnership. It has legal personality. So
exactly.
Good. So in other words, so let me try and describe what this lawyer described to me, and I was hoping to get him on these calls. But basically, he talks about the threshold, you know, the liability, and I guess there's a distinction here between liability and legal action to be teased out. But the liability for debts incurred by the entity arrives at the threshold of that entity, let's say in this case a simple non-incorporated partnership. And having arrived at that threshold, it's then passed through to the legal persons, in this case the partners, that can themselves be deemed liable, in other words, are themselves legal persons. So when you get to that threshold is not named in court actions. The passing through to the legal persons has to happen before anything is named as a defendant, and this is consistent with your earlier point about suing the trustee, for example, in the case of a trust. If it's non-incorporated trust, then again you have to actually name the trustee as the defendant on exactly the same basis. Would that be correct?
Yeah.
And that gives us a nice clear explanation of what we mean by legal person as well, because that's a test now you can apply. Can I name this thing as a defendant or not? And if I can, it's a legal person, and if I can't, it isn't. And that simplifies a lot of the earlier confusion around legal entity versus legal person, where legal entity is anything that can incur liability, anything that can enter into a contract, because for risk management purposes, that's the entity you're dealing with, versus where the law actually takes it to. Fantastic.
Find examples if you can, Mike, because it's in conflict for everything I'm finding.
What's in conflict with everything you're finding?
That you can't sue a trust, that you can sue a trustee. That the trust is not a legal entity.
No, trust definitely is.
Sorry, can I interrupt? Rosa Chandik, I've unmuted your line. Can you add to that discussion?
Can you hear me?
Yes, we can. Thank you.
Yes, Rosa.
Excellent. Thank you. I am not knowledgeable in these matters. I'm listening with great interest to learn myself because I have an interest in this topic. But I have a question that maybe is a bit naive. Are we focusing too much on determining the laws of individual countries as to whether one or the other can be sued or not? As modelers, should we not just make the legal entity as an attribute of the entity as opposed to trying to insert in our model the laws of individual countries? Wouldn't that make this model only specific to one country or the other?
A very good question.
And again, I apologize if it's naive.
No, not at all. It's a very important question, and it actually ties into something we see if I can find it now. Something we talked about last time, which was actually quite nuanced, but I think quite important, is that we have this concept of a legal entity. This is anything which is contractually capable, so something which is deemed as being capable of entering into some contractual relationship. But that is defined by context. Typically, it's recognized as being such a thing in some jurisdiction. So it's not itself an independent kind of thing. It would be some kind of formal organization. So anything that can enter into a contract can be any kind of formal organization, including a non-incorporated partnership, a trust, and so on. But legal personhood, the ability to sue something at law, is a separate fact. In teasing out those separate facts, when you're doing a particular application, you can just choose to ignore that and say just start with formal organization and everything below that is of interest to you. From another perspective, you might be looking at what you would sue or something, which is an important legal fact, and so then you would go down this blue hierarchy, which would include natural persons, for example, as well. These would be important, for example, in a loans model or something like that.
But if in this example, trust is a formal organization, is it incumbent upon us in this exercise or in this model to decide who can be sued, the trust or the trustees, just to say that in some cases, trust can be a legal entity, in others they may not be legal entities because they cannot be sued.
Right.
It's an optional.
Yes.
It's an optional attribute of trust depending on the country that you're in.
That's right, and this is precisely this, and what you've just said is exactly what we modelled here, that was quite counterintuitive at first, but seems to simplify the rest of the model, because by defining the entity as being dependent on the jurisdiction in which it's recognised as such, and by removing that from the rest of the hierarchy, we've ended up with a much simpler hierarchy. In a application model, you would replace this little box here with a nice little yes, no, or Boolean data type that says, is this recognized as a legal entity in the jurisdiction that this application is running in? And your jurisdiction becomes incorporated in your application. So I think we're saying the same things, and we've just used this modeling approach to deal with that exact issue.
I apologize. I thought that because we had entered into a discussion as to specific ability to sue in specific countries, that we were trying to resolve that for the model.
Ah, right. Now that is an interesting point, because the ability to sue something in different. Well, I think the difference is the the body corporate or legal person, we rename this liable entity, but it's more commonly known in legal circles as legal person, is the thing that you sue, and that's an important and fairly clearly defined concept. I think, and others may disagree. I'd be interested in a range of views on this. That legal personhood, although it's recognised in one jurisdiction, if it's an artificial legal person, it is constituted in some jurisdiction. The jurisdiction actually creates it, so we can define it as an independent kind of thing rather than making it a relative entity like legal entity, which is something that has contractual capability. Whereas contractual capability, the ability to enter into contracts, it will vary. So the same entity may be recognised as being contractually capable in one jurisdiction and not another. Whereas I think once something is a legal person, it's constituted in some jurisdiction. Obviously, the contract, again, if you're entering a contract with that, you really look at legal entity, you define what is the jurisdiction under which that contract is deemed to operate, and what jurisdictions courts are used for dispute resolution. So it may be the courts of England and Wales or the courts of Delaware or whatever. I think I'm safe in making the liable entity or legal person an independent kind of thing because it's only constituted once. But much of what you're talking about would be to do with who you can enter into a contract with. This is this threshold thing again, which would be very jurisdiction dependent. But yes, be interested in more thoughts on that. But that's kind of where we've ended up at the moment. Because I see a little thing from Jeff Braswell in the chat. Do not jurisdictions create or define what a legal entity is? Yes, they do. Do you want to expand on that? Feel free to.
Jefferson, your line is released.
Oh, thanks. Well, it's just the fact that the concept of what is legal is defined by whatever the jurisdiction that might in fact say what is legal first says so, and so there are that just seems to be a fundamental notion that we have different jurisdictions and therefore different things that are legal.
Yeah. Yes, that's right. And that's why we separated legal entity. In fact, I noticed I didn't have a definition in that relationship, so I'm going to use what you just said. The concept of what is considered as legal is a function of the jurisdiction in which it is recognized as being a legal entity. And that's legal entity, something that can enter into a contract. There is an open question whether that same thinking should apply to legal personhood. I've been resisting it simply because it makes a much simpler model to have, since a legal person that's not a natural person is only constituted once, it's a legal person in that jurisdiction. But some may disagree. It may be that this should also be a contextually defined entity like legal entity. I don't know how helpful that would be or how accurate that would be, but yeah, this really comes into questions like, particularly for the LEI activities, the concept of extraterritoriality. Put my teeth in. So, in other words, if somebody in some jurisdiction, say in some state of the United States, like Maryland or somewhere, decides to recognize some Panamanian entity as a legal entity, and therefore as needing an LEI because it's entering into some swap agreement and needs to be tracked, then that recognition of it needing the identifier is a recognition of it as a legal entity in the context of the jurisdiction of Maryland, even though the entity is registered in Panama and is an independent body corporate registered in Panama in that case. So what we've essentially ended up with is a representation of the complex question of, in the LEI activities, how does one deal with extraterritoriality? We aren't necessarily answering that, but we're describing the problem. which is that the recognition of the entity is itself contextually defined. It's not an independent kind of thing. The question is whether legal personhood is also a contextually defined concept, and I'm resisting that because I'm thinking that a legal person only exists in one place, and it is made to exist in that place, and it is a social construct from the point of view of John Searle's work, for example, which has been created by some act of law in some jurisdiction, and that makes it as real, as independent as any of the other things we've talked about. But I'm open to persuasion if people feel that it should be also a relative thing. Do bear in mind that these contextually defined or relative things are quite difficult for modelers to then understand and put to work in a technical model, because you then have to identify how the context of the application you're creating relates to the context of these contextually defined concepts, and how to unpick those. There's a whole science in that which we barely even started on.
Yeah, hi, it's Phil here. Mike Atkins, yeah, you're right. Under US law, you can't sue a trust fund on its own directly. You have to bring a joint action against the trust and the trustees, because the trustees are seen as the legal representatives of the trust.
Is that just U.S. law?
Well, it's certainly true under US law.
Yes.
So let me get it right. Under US law, you can't actually sue the trust. You can only sue the...
It's true under Canadian law, according to this link that Linda sent me. I'm forwarding it off to you, Mike. In fact, it says in big, bold letters, trusts, of course, are not legal persons and cannot be sued.
Thank you. Nice to know that our original model was right all along with that, at least about trusts, because I keep hearing rumors of there being jurisdictions where trusts may be legally incorporated. But if so, if we come across them, we'll treat them the same way as partnerships, which is that there's partnerships and then there's legally incorporated partnerships.
I think the complexity comes from the subtle difference between what you can and can't sue versus what can and can't legally own assets.
Correct. And that's where, and to the earlier point, you know, once we've dealt with this level of complexity, we may have dealt with it purely in order to know not to worry about it in most applications. But until we deal with that complexity, we can't. We keep going around in circles as we've seen so many times in the past. So,
because the idea is you can sue the trustees of the fund, but the trustees of the fund don't own directly the assets of the fund. The fund owns them.
So
that's the whole the fund is to protect the assets and put them at arm's length from the trustees.
Indeed, and that's the whole nature of a trust, even if it's a trust for a very rich child, or a blind trust for a US president or something like that. Congratulations, all of you, by the way.
So it depends how you're splitting the cake. If you're modelling things that can or can't be sued, or are we modelling things that can or can't legally own assets?
Well, we're modelling both, and the one we're most interested in is the one that can or can't legally own assets. But by modelling both, we can distinguish. So let me just see if I can get that down. So we are distinguishing.
Fine. That's fine, as long as we recognise that they're all an orthogonal set.
Yes. And what can or cannot own assets would be any kind of formal organisation, perhaps also informal organisation. There may be some thought required on that. And now, is there any distinction between what can or cannot own assets and what you can or cannot enter into some contractual agreement with? Because at the moment they're they're not similar.
You cannot enter into a contractual agreement with something that can't be sued for fairly obvious reasons, yeah?
And that's the key point right there. So synonymous.
Oh.
Yeah.
Oh, now, a year ago we had those as synonymous, and then people kept telling us, but a partnership or a trust can enter into a contract. The contract isn't with the partner or the trustee, it's with the entity itself. So that's the contractual capability. That's our legal entity concept.
Well, we beat that to death on trust so far. What's the other one? Partnerships?
Mm-hmm. Yep.
Well, what's the point of a contract if you can't sue somebody for breaking it?
Correct.
This goes back to this threshold concept that the contract takes you to the threshold of the organisation, such as the partnership or the trust, but then the liability unwinds to the jointly and severally liable partners, as we talked about a couple of weeks ago, or the trustee, or other entities that are defined by the trust agreement, in the case of trust, as carrying the liabilities.
Okay. But I would argue that what's really going on there in modelling terms is that one legal entity is entering into the agreement on behalf of another.
Right.
So the trustees are entering into the agreement because they're the ones you're going to sue on behalf of the fund, which is what you believe you've got the contract with.
Yes. So what happens when you enter into a contract with a trust, a non-incorporated partnership?
Yeah, I mean that's definitely true for unincorporated partnerships, because you sign a contract with a partnership, really you're signing an implicit contract with whoever the partners are, jointly and severally.
That's right.
So when you have to
sign a contract on behalf of the entity, the partnership, but in so doing, they are signing a contract which exposes the partners to joint and several liability, to the liability incurred as a result of the contract. That clears up that whole threshold question rather nicely. Thank you.
Cool.
Mm-hmm. Right. And so, yes, for most practical applications, you would roll that up into one kind of entity, which you can probably think of as formal organisation, because a formal organisation has to have some covering agreement among its principals. And that actually brings me to another question I'd laid out in my agenda, which is, what are the contractual terms that need to be articulated for this contract? So we have in the model generally, wherever there's a contract, it has a relationship to contract terms. So for example, if the contract is a debt instrument, then there are terms for interest payment and principal repayment and so on. Do we need a bunch of kinds of terms for these organisation covering agreements? If so, what are they? I would suggest yes, we do, and one of them is the terms that set out the liabilities of the signatories to that contract. That would be the partners or the trustee or the other entities involved. Would that make sense?
Yeah.
Now, in a trust, is the trustee the only entity that actual liability passes through? Clearly, it cannot pass through to beneficiary. The third entity of the trust is the trust sponsor, if I've got that right, and there's no guarantee of that.
You don't have to have a trust sponsor.
Ah, thank you.
I mean, it depends on what sort of trust you're talking about. You're talking about a unit trust, for example.
Right, at this level I'll talk about every kind of trust, and then we want to specialise that for the kinds of trusts that are specific to funds and special purpose vehicles and so on, as subclassing of this most general model. So in this most general model, trust sponsor shouldn't exist, and it should exist for some subtype of trust.
Yeah, SPVs have sponsors, but
right.
Trust funds have trustees and trust fund managers.
Ah, thank you. So then we have a subtype of, I won't try and model it now, but when we have a subtype of trust called a trust, I don't know what we call it, a trust fund trust. Trust funds have, as parties, so all those little stickman things are parties. That's some entity in some role, and one of our questions is what kinds of entities can fulfill that role. So trust funds have our parties, trustee, and what was the other one?
Trust fund manager.
Trust fund. So the trust fund manager is defined formally as a party to the trust, a signatory to the trust deeds, presumably with responsibilities set out just as the sponsor, just as the trustee has.
Well, yes. I mean, they're acting
Right.
acting on behalf of the trustees as their legal representative to administer the trust fund for the benefit, hopefully, of the trustees.
Got it. Trust fund manager acts on behalf of the trustee, not on behalf of the trust.
Well, it's kind of the same.
The trustee that's legally liable if what the trust fund manager does goes south. The trust fund manager acts on behalf of the trustee to manage the assets of the trust. Is that what you're saying?
Yeah, so it's quite common for a trust fund manager to be taken to court by his disgruntled trustees for failing to discharge their duties properly and losing all their money.
And so those duties would be another set of contractual terms.
Yeah.
Fantastic.
Well, it's like you investing in your own pension fund. You have a set of expectations about what your pension fund manager is going to do for you.
Yep.
And you hope they'll deliver.
And you'll see if they don't. And so they enter into the contract. And of course, some of these kinds of things, the roles they can fulfill may include human beings. Some of them must be human beings, and some of them must not be human beings.
But both trustees and trust fund managers may be people or can.
Right. So the range of the party type, trustee, may be a natural person, may be a what else? An artificial legal person.
Yeah.
Or what we call body corporate.
Yeah.
I'm sort of torn between the self-describing words that we've chosen and the labels we've chosen for simplicity and the legal terms, right? And we've got a trust fund manager.
Same thing.
And that may also be a company as well as.
Yeah, absolutely.
May it also be a individual human being?
Yep. Usually is, but not always.
Right. And where it is one or other, does that cause one to classify the fund as one or another of a different kind of fund?
No.
No. Right. Thank you. That's a useful thing to know. These distinctions do not.
No, it doesn't alter the type of fund. It's independent from the fund type.
Right. Fantastic. Okay. So what I'll do, I could almost do it now, but I don't want to try and get distracted doing too many modeling things, but I'll describe what I'm going to do is to identify against this kind of contract the contractual terms that define the parties, the liabilities of those parties, the duties of those parties. The subtype of that, where it relates to a fund, would describe the duties of the fund manager. The identity relationship of these parties, forgetting sponsor for now, but of trustee and of fund manager, let me just stick that in fact, would cover any legal person, but it must be a legal person, and this goes back to, did we need to model the ability to sue something rather than just the ability to enter into contracts? Because unless I've misunderstood it, whether it's a body corporate or a natural person, it must be some legal person. Is that correct?
Yeah.
So therefore, we can define the identity relationship of those parties. Yep. this will actually be attached to a subtype of trust, because not all trusts are funds. So this is just here for now, but there should be a subtyping there, which I can do. And then, because all parties are relative entities, they have some identity relationship, and the range of things which can be the identity of a trust fund manager is any legal person or liable entity. And that's good. And the same is true, of course, of the trustee. Has to be a liable entity as well. I'm calling this relationship identity, but that can cause confusion with things like identifiers and so on. What I mean here by identity is what is the range of things that can fulfill this role. I wonder if there's a more descriptive label like, I don't know, range of things, or performed by, or something like that, that might be more meaningful, so that it's clear what we mean. Because again, we're in the realm of relative entities here when we talk about parties, and so every relative entity is identified as some independent thing, in this case a liable entity, and that's why we have these in the independent thing hierarchy. Good. Yeah. Any ideas from a label for that? Range, or what performs the role, basically, is what that relationship means. I'm open to ideas for a better label.
Would that be an enumeration? An enumeration? Is it a list?
That's a slightly technical term. Or it can be anything that's from this or from this point downwards. So anything below what it's pointing to in the hierarchy, you could, in an application, turn that into an enumeration data type and put that as a data type of the relative entity over here, and say trustee is either body, corporate, or natural person, or sovereign, which is also in this hierarchy. So that's how you would transform from traversing this identity or you know, things which could perform it relationship to the actual entities themselves. Yeah, you would do that in an application as a enumeration.
Yeah, I was just actually referring to the term, not the structure.
Right. Enumeration. I've not come across that as a legal or business term. That's the reason
I see.
Language of applications there. Now I realise that Vicky Starr has had a question in the questions thing for a while, and I haven't got to you, Vicky. So I'm sorry about that. Do you want to unmute? I think it's still in the same area we're talking about. No. So Vicky says, "Can a trust be sued?" Is a valid concept. Oh, was this you that asked earlier? I didn't recognise your voice. Provide some boundaries on the definition of a legal entity. If a trust can't be sued, then is it still a legal entity? And is this a concern for investors in a mortgage-backed security in the US? So, yeah, did we answer that earlier, Vicky?
Vicky, your line is
Very
open.
useful text in the chat log. Okay. I think I've lost track of who was speaking earlier. That may have been when we were talking about, you know, were we interested in what can be sued, or what can be a what can enter into a contract or hold assets and so on. So Vicky, let me know if I've missed anything, but hopefully we covered that. Anyway, so Mike Atkin pasted a thing in the chat log. Do have a look at it. I'll include it in the notes, of course. SPVs and SPEs, brass plates, specific functions. That will be in the notes. And you probably saw last time we had that document that Mike found, which I added to the references to the notes. So there's still a bit of reading to do on that, but I'll try and make sure that's all covered in the SPV side of things. Good. So quick sanity check and time check. It's coming up to 10 o'clock. We've got another half an hour. We've dived into several of the areas we wanted to look at, which is good. I've got a lot of modeling to do here on trusts, subclassing this, the types of trusts that are related to funds rather than trusts in general. I think what I'm going to have to do is take a first cut at that, think of some labels for the subtypes, and maybe several. I'll read some of these resources. I'll articulate the kinds of terms that exist, and obviously things like trust fund manager and so on would be some subclass of trust. What would we call it? A trust fund trust, fund trust, fund administration trust, fund related trust. Anyway, I'm open to ideas on that. And that then, I think, answers the questions I was going to cover on trusts as they relate to funds. What are the types and legal forms of beneficiary? Yep, we got that. It can either be an individual or a fund SPV, and those would be distinct. What range of contract terms? What types of contract terms? Yep, we covered that. Fund-related business entities, types of entity, fund administrator, other fund parties. Are there any other fund parties besides the, now, for example, the trust fund manager and the fund administrator, I believe those are two different roles that can both exist in the realm of funds. Am I right or wrong, or is that just a labeling difference? Are there other parties that we need, A, in this trust model, or B, in the wider model of kinds of funds in general? Trust administrators and trust, portfolio managers, trust fund managers, are they synonyms or not?
Yeah, they are. In my opinion, they are.
Right.
Different types of fund have different named roles associated with them.
So basically, they are synonyms for the same concept in different kinds of fund.
Oh, hang on. Sorry, no. Sorry, I'm wrong. I apologise.
Ah.
It depends on the type of fund, but you can have a fund manager who's like the legally responsible person who's managing the fund. The administrator can be, then they can do the administration job themselves, or they can outsource it to a third party.
Ah. So the fund manager has the legal responsibilities.
Yeah.
They can perform these responsibilities, if you know what I mean. That's not really well-formed English. They can perform the role defined by these.
Yeah, the administration task
themselves,
the out. Yeah.
Or they may outsource it, and that, I think, let me find the fund model. I think that ties up with what we got from the fund folks earlier on in the actual very detailed fund model. Ignore the supervisory authority. We have the fund legal form, fund administrator, the unit issuer may or may not be the fund administrator, the fund legal form, which is an SPV or trust or whatever other form it takes, and there was something else. Okay, maybe I didn't get it. So the fund administrator may outsource some of the responsibilities for example, portfolio manager,
yeah,
or accounting. All sorts
for example,
of things.
There are certain things that a fund manager is not allowed to abrogate to a fund administrator. So the fund administrator can't go and get new trustees or new clients, and they can't decide what assets go into a fund. Only the fund manager can do that. But a fund administrator can do things like paying the bills, doing the accounting, preparing all the SEC files, that kind of thing.
So fund administrator, meaning the thing that some responsibilities are outsourced to.
They can do all the admin, if you like, but they can't actually run the fund.
Maybe, for example, admin, accounting, reporting or not?
Yeah, reporting, yeah.
But they cannot run the fund, e.g., oh gosh,
they can't choose they can't manage the asset pool. Yeah, and they can't decide who gets to invest in the fund.
That was the other one, yes. And of course, that's distinct between open and closed-ended funds anyway, because in the closed funds.
Yeah, absolutely.
An open fund. And so basically, running the asset pool can't be outsourced. You'd have maybe an individual employee who's the portfolio manager, but they cannot actually work for the they cannot work for an external fund administrator. They must work for the
fund manager. Yeah.
Fund manager.
Yeah.
Fund administrators, fund manager. Where is she? Not agent, fund auditor, fund accountant. I don't know. Maybe we didn't pick it up in that earlier model. So let's get our terminology right then. The tasks. So fund manager is the label for the party that has these formal responsibilities, and a fund administrator is a possible outsource that carries out admin roles.
Yeah.
Would that be? And trust fund manager would be a type of fund manager, I would also suggest, because not all fund managers are trust fund managers. Would that be?
No, fund managers, yeah.
Mike, can I interject?
Yep.
There's two things. I think on the same note, I've just received an email from Stephen Murray. Stephen, I put your line on hold. Actually, I think we've lost you altogether on the audio. I can't release your line. But what he said is that trusts can have custodians, trustees to hold asset safes, managers who manage the assets, admin, accountancy, etc. This is a service relationship akin to a company's auditors. And then he's also going back on a couple of points from old reports. I think I'll read it out, but I think this might be slightly different. So going back to 24th of October review, where you had a comment about this may be more valid to a model as JV, as a kind of organisation in its own right, like a partnership. It was suggested that a JV is a lot like a partnership, which should seem to answer this question. Murray has said he's not happy about this. As described above, a partnership is effectively an agent with an authority to bind the partners, but ultimate recourse is to the partners. JV is usually a limited liability entity, and creditors would have no recourse to the joint partners or to the joint parents. Yeah. Okay.
So it's not as similar as I thought, and that's important.
Okay.
Yeah. And so that was Murray. And are those comments on there? I see the chat has filled up since I looked over my shoulder.
I'll send them over on email.
Send them to email. Fantastic. And they'll be added to the observation log. And since they're substantive answers to these questions, they'll also be added to the notes themselves. Thank you, Murray.
While I'm on it, I've also had in the meantime Sheila Jeffrey. Sheila, can you join the call?
Yes. Can you hear me?
Perfect.
Carol?
Well done.
Yes, Sheila.
Well
Hi.
done.
Okay, great. Mike, Sheila Jeffrey, Bank of America. I'm just wanting to make sure that we cover all the territory. In the work I've been exposed to, I've also come across things called VIEs, variable interest entities, and I don't have the business knowledge to know whether those are the same thing as special purpose vehicles or different, and if they are different, whether or not they support the same relationships and fulfill the same roles within this model. So I would like to make sure we get that addressed.
Thank you. Yeah. I think it may be that what we call special purpose entities, let me think, there are different kinds of entities that fulfill these different party roles. Special purpose entities specifically ring fence something, but otherwise there's a lot of different kinds of party, each of which have a range of things they can or cannot be. So which ones must be legally capable entities, which ones are merely contractually capable. Good. So that gives me a nice avenue to explore whether it's the same or different to an FPV, whether they perform the same functions. Is that right? So I stopped writing and started talking and I've lost the track. Find out whether they're the same or different to SPV or SPE and whether they perform the same functions. Is that what you were saying?
Yeah, just from the context in which I've heard it, and I can't vouch for this, and I keep trying to reach out and get more business representation from Bank of America engaged in this conversation. But it sounds to me like they come from different parts of the organization and may be created for different business purposes. So that's why I want to get the validation that either there is no difference between them, or if there is, let's try and drill it out and understand it.
Right. Whether there is any difference between them and drill down into these differences if there are. Yes, because it could be that there's kinds of entities that are being created here for different roles that may not be SPVs in the sense that we've defined them, or it could be that we've defined SPVs too narrowly as being something that is created to carry some assets off the balance sheet, or thirdly, it may be that we've made SPV too narrow in our existing models to make them always something that holds some kind of pool. That may turn out not to be universally true of everything that's an SPV, or it may turn out to be universally true. I don't know if anybody knows either way. So what's the necessary definition of being an SPV in that sense?
Okay, thank you for taking that point.
Yeah, that's fantastic. Thank you for that. Good. In fact, yes, in earlier reviews we did say that SPV always holds some kind of pool. That's clearly not a necessary or defining characteristic of it, because it's this ring fencing of assets, which I need to think of a way of modeling, which becomes the defining characteristics. So is what we mean by SPV always something that holds some kind of pool? The ones we've specifically identified certainly do. The ones for debt securities issuance.
An SPV doesn't have to hold a pool of assets, even though it normally does, and other things can hold pools of assets that aren't SPVs.
Indeed.
So it's not a defining characteristic.
So it's not a necessary characteristic. And of course, other kinds of things can hold pools without that making them an SPV.
Yeah.
Good, thank you. That was what I was starting to suspect. So we need, we may not have a good name for it, we need another level of generality somewhere in between the kinds of SPV that always hold some pool of assets and SPVs more generally, because this is not a necessary or necessary and sufficient fact.
Yeah.
Incidentally, in this model, I get shouted at by the semantic folks sometimes. We define all these facts without really defining which ones are necessary or necessary and sufficient or sufficient. There is more formalism available under the hood, as it were, of this model that will allow us to put a bit more formalism to what are necessary characteristics and what are not. So I generally try to, with these extra levels of generalization, try to define necessary characteristics anyway, and this is clearly not a necessary characteristic, and that will actually make it naught to many, or rather there's a kind of SPV with a pool and there's a more general kind of SPV that doesn't necessarily have a pool, and maybe with slightly artificial names we can generalize that down. I'll give that a bit of thought, because then we start to get, either that means more things in the hierarchy, it means that we are only defining facts because they are some defining characteristic of that thing. The old walks like a duck. So, thank you. That was one of the things I wanted to know, and now we know it. Good. Yes, that brings us back to our earlier question then. The constituted as for a special purpose vehicle must always be a body corporate, or somebody said last time that a trust may itself be the form that an SPV takes. and we've established now that a trust is not a liable entity in its own right, clearly the trustee doesn't become an SPV. Should we elevate this relationship to formal organisation or even legal entity as a relative thing, or do we now feel that it will always be some kind of liable legal person? So is the model actually correct after all? We're saying no, the model is right as it stands, or more research needed.
Mike, I'm not sure about exactly that because I'm not an expert on it, but I know that some of the special purpose vehicles in the U.S. that were able to be looked into externally were because they, in fact, were set up as trust with trustees. For example, the I think the Goldman Sachs deal, Abacus deal.
Oh yes, somebody mentioned this last week. This Abacus deal. Yep.
Or I think the reason that some of that information about all of the components of that were available to be looked into by external parties because it was set up as a trust.
Oh.
There's some research that was done by Valdez Krebs, which diagrammed in a network fashion all of the relationships of the Abacus deal, and he was able to get access to that data because it was a public record.
Right.
Yeah, it's Valdis, not Valdez.
Oh, sorry. Valdis.
Yeah. You're thinking of the old.
Or not?
It's actually his name. It's Valdez Krebs. His organization is Orgnet, ORGNET.com. It was just some very valuable work.
Thank you. Yes, I should have. I meant to look at that Abacus thing last time. I didn't manage to find anything. So good. And that means that even though it may be somewhat anomalous, you can in fact create a special purpose vehicle which is not necessarily a legal person, that can be, we could make a logical union, legal person and trust, but I'd say the implication of it being trust in that instance is that it could be pretty much anything. So I'm going to call it formal organization if I can find the darn thing. It's probably right up here. There. So there we have. Just bend that line. Constituted as any formal organization, or you could say it has to be some legal entity, that is some formal organization that's recognized as having contractual capability. That makes the point to a relative thing. Would that be more appropriate, or would we say that an SPV can be set up as any kind of formal organization or some specific subset of kinds of formal organization, which will include by extension artificial persons and so on?
SPV could be anything.
Anything. Fantastic. Thank you.
Could be any legal form you desire.
Ah, that's two answers. Can be any legal form you desire, including legal forms that are not legal persons.
Yes.
Fantastic.
Although 90% of them are companies or partnerships.
Yes. Now, can they be a non-formal organisation, a club or a cartel? Or I'm guessing not, because it has to have at least some balance sheet to put things onto. Fantastic. So then, formal organisation is correct. Good. You agree? Does that make sense?
It has to be a formal. Has to be a formal organisation, because there has to be a document that describes the aims and purposes of the vehicle.
Great.
whereas obviously for a cartel there wouldn't be.
Right.
And even though for a club there might be, that's a kind of different situation.
Exactly, yeah. So in fact, and what you just said there, describing the aims and purposes, is precisely what, for any kind of formal organisation, what an organisation covering agreement does. It covers the relationship between the principles. In fact, I should extend that and covers the aims. This is for any formal organisation. This comes back to how much we articulate the contractual terms that this contract is made of. And then when it's a SPV, then there will be details in those terms covering the aims and purposes of the entity as an SPV. Fantastic. Good. And what about the sponsor of the SPV? Can that be anything as well? Anything that has a balance sheet can take things off the balance sheet by creating an SPV, or would the sponsors, there's now more than one of them, of course, would they be necessarily a artificial legal entity, or even can human beings be a sponsor of an SPV? I'm guessing not. They don't have balance sheets. What do you reckon? Should we err on the side of caution and move it up to formal organisation?
Yeah.
Anybody disagree?
Well, I think there are situations where an individual, in conjunction with a corporate entity, can create an SPV where they are both sponsors.
Ah.
I think it's pretty rare, and it's done obviously for things like tax avoidance.
Ah.
Or should I say tax management?
Of course, yes. Well, tax optimization.
That's it.
And this would be one of these most general kinds of SPV, which is anything that you're moving stuff off the balance sheet and isn't one of the ones that holds a pool in something and is used for the purposes we've currently defined. But of course, that's a wider range of purposes that we now have for SPVs. Right. Now, in that case, can it be any autonomous entity? That would start to include animals and things, or can it be any liable entity which would cover human beings and legal persons but would not cover trusts? Can a trust be a sponsor of a special purpose vehicle?
Sure.
Ah.
Why not?
Gosh. So actually this could be anything. Oh yeah, and there's a note here from way back which I've forgotten about. I meant to mention this. I was reading about some of the stuff going on in Greece a year or so back, and discovered that there was some special purpose vehicle sponsored by Greece. Now Greece, of course, is a sovereign, so that's another kind of legal person.
Yeah.
So basically, it need not be a legal person, but it also need not be a formal organisation. It can be anything. Can't be a dog or a cat. It can be a logical union of formal persons. I don't know. Yeah. Yeah,
you might.
Union of a range of things.
You might or might not be interested to know that the most common situation where a person forms an SPV in conjunction with a company is so that they can move their own house or one of their properties into the joint venture and into the SPV, and then sell the SPV, which means they only pay tax on the sale of a company rather than paying capital gains tax on the sale of a piece of property. Clever, eh?
Right. Right. So I'm going to think about how to model that, because the one thing we've not got a thing to point to in the model is the logical union of formal organizations and legal persons, or formal organizations and individuals, other than at the level of autonomous entity, where it's anything that can act on its own behalf, which might include a fish. Clearly a fish can't set up so maybe we need another layer in here for intelligent entities or something. I don't know. I have to think about that. Fantastic. Good. So those are those questions I wanted to talk about. Sponsor, legal form. I think we've gone through all the questions I was going to direct us through. And if I do the model changes and extensions I talked about, the legal contractual terms for these things, the subclasses of trust-related, fund-related trust entity, the refinement of the hierarchy of SPVs versus pool-related SPVs, the changes we made here, the logical union of the range of things that may be sponsors of a special purpose vehicle, then I think we can say, or can we say, that we've dug into all of the requirements for a business entity model as it relates to funds and other kinds of special purpose vehicle. We haven't dug into the mortgage-backed and asset-backed securities model in particular, but by getting these ranges right, we therefore should be able to talk to all of the kinds of entity that must be in this first version of the model in order to be able to sensibly talk about funds and SPVs in general, or not. And bear in mind, we're off next week because I'm off, and we're off the week after because it's Thanksgiving. So if I basically, as well as writing up these notes, carry out all the model actions, circulate that in about a week from now for us to look at offline, then when we come back, we can look at the other characteristics of entities to see what needs to be in our first draft and what kinds of relationship hierarchy needs to be in our first draft. How does that sound? Because, you know, basically give me a week to do these changes, and you've then got another week to review them offline and shout at me the week after if I've got it all wrong. How does that sound?
That sounds good.
Fantastic. Well, it's been a really good session. We have 3 minutes to go. Anything else that people want us to remember, include, look up, research, articulate in the model, and so on? I know there's a lot of time I'm just writing things down, or even just naming classes and putting definitions. There's a lot of scope for further articulating the details. So either now or by email. And again, I don't know if you noticed, I've got this observations log. Anything that you send me by email or that's in the chat or questions thing here, which comes to me in a spreadsheet, they all go in the obs log with my slightly laconic answers. So do have a look at that. Mail me stuff, and I'll keep track of all those comments. So let me know the more you want articulated, more levels of detail, or not. Then I shall action that in the coming week.
Yeah, Mike, I'm also trying to look into that abacus thing to see if I'm correct on that or not. I might not
Fantastic. Thank you. Yeah, some nice examples like that would, yeah, the proof of the pudding, as it were. It's those kind of examples that tell us when to elevate something beyond what it usually is to what it necessarily must be, and that's often a very different thing and often quite unexpected. And that way we don't lock in assumptions that aren't actually real business knowledge. So that's fantastic. Thank you. Good. Well, anything else before we sign off? Any final comments? Mike, you got any closing thoughts?
No, sorry, Mike. I think this is good. I think you got it nailed, and meeting should be adjourned.
Fantastic. Thank you very much, everybody. Really enjoyed it, and I'll let you know when I put the notes up. Talk to you next time we have one.